Okay, good evening, guys. Today we are going to be talking about how to identify valid BOS for trade entry. Okay, I believe we all understand what BOS means, break of structure. I'll be very fast because of network. Okay, so I won't get kicked out again. I've been kicked out like 3 times. So what we are going to be looking at here is smart money concept, SMC trading strategy. All right, it's known as smart money concept. So money concept is, let me place this. Okay, you can also see this. So smart is a trend following strategy which helps you to identify high value areas where you can join the market from spot trading opportunities and make money from the market. Okay, in order not to take much of our time, I would go straight and let me see. Let me draw a mock-up as I believe we are already behind time. So I want to go fast. Let me draw a mock-up. I hope I have in mind. Okay, so let me use this as an instance. Mm, okay, so this is our
Guys, I know each other. Why they apologize for me? We just be
mute
friends.
that mute yourself, mute yourself.
Just be friends. So I just say my clear you waiting I see. Let me see. I
Mute
the best one.
yourself.
I go best one. The best one. Okay.
All right, so today we are talking about break of structure and how we can identify a valid break of structure. Okay, so this here, this mock-up here, we all know that in our charts, price don't always look this simple. Okay, but sometimes you need to be able to identify all this from your chart. So this here is break of structure, and we are going to identify why it's a valid break of structure. So now there are some confidence you need to see for you to say a setup is valid. Either a setup is a valid one, and they include one, the break of structure. your imbalance, your candle here, your green candle here must have an imbalance. You must have liquidity, which is this. You can call it engineering liquidity. Okay. And what again? Your valid supply zone. If you're selling, your supply zone must be valid. If you're buying, it's your demand zone. And one more thing again, you must be buying from a discount region, okay? And you must be selling from, what is it called? A premium region. Hope you guys are following. Mr. Val, are you there?
Yes.
All right. So before you start trading smart money concepts, you should learn how to spot the smart money concept is a trend following. So if you look at this, if you look at here, we also have another break of structure, okay, and which made this demand zone here valid. Now I'm going to talk about sweep of liquidity, but that would come later. I don't want to confuse you guys with those ones. That would come later. But for you to know that your demand zone is valid, the price that moved out of that point must break structure, like this one here that I'm indicating. So let me remove this. So like I said, your trend should be on a higher high. I believe everyone here understands market structure very well. Everyone here is a trader, so you understand market structure. So in case you don't understand what I mean by market structure, I mean this. And if you've forgotten how to spot your valid market structure, maybe you should check the videos I've made already and go through them. You will understand what I'm talking about. Okay, so now when the trend is going higher highs, it's creating higher highs, lower lows, higher highs, lower highs, higher highs, lower highs. We are bullish. Okay, that means we are bullish. The market is bullish, and we are on an uptrend, like some persons would say. And when we are creating this, when we are creating this, that means we are on a downtrend. Okay. Now, for the fact you're breaking structures, you're still on an uptrend. You can say this is a very simple strategy, but it's very, very important. For the fact you're breaking structures, you're still on an uptrend. For the fact you're breaking structures, you're still on an uptrend. Okay, so I would show you a trade. Let me show you guys a trade. Let me show you guys a trade on Euro USD. All right. We're still on the trade itself. Giving us profits. Now you can see this trade. This is an example of breakout structure. Now, this demand zone here was valid. We took this trade from our community. I dropped the signal. You guys can testify to that. So what happened? This trade came up here, formed an equal high, which we all know as liquidity. It came back, it tapped on this block, broke this structure here, giving us a break of structure. It went up, this demand became valid. We came back and tapped on it. It went up again, breaking this other high here, making this demand valid. You can see we came back down, price came back down and tapped on this same block again. And now we are going higher. This is the aim. Okay. So if price doesn't violate this block, that means we'll get it. This is pure price action. This is what you need to understand about breakout structure. Yeah, so there are other confluences you can also add to the breakout structure, which I will be explaining later. But let's go back to NAS 100. Let's go back to our mockup. See how the next. All right, so this would answer some person's question here, especially Mr. Val. Okay. I'm going to draw a mock-up, another mock-up to explain something to you guys. This is very, very important. Please pay attention. Now, like I said earlier, smart money concept deals with breaks of structure. Let me do something. Remember, this is just a mock-up. Okay, let me stop here. Now, we see a lot of traders, these price actually pushed down to a discount region, mitigated this block, came back up, we had a break of structure. Went up again. We came to the discount region. I believe you understand what I mean by discount region. We don't buy as SMC traders. We don't go into the market at this 50% region. Okay. Now the essence why you have this 78% fib level is to tell you that okay, this point here is discount. You should be looking for buys here. No. No.
Yeah. You can hear
So
you.
within this point here, which is very, very bad, you want to sell down to the demand. Don't do that. So since Fibonacci level is telling you, he's not saying you should come here and put your uh, high position, except you can risk those is It's not always fail most times. So your entry should be always below the 78% Fibonacci level. If price doesn't come below there, forget about it. Allow the price to go. So now, why did I draw this mock up? You see, this price was supposed to come down to this point. It was supposed to come down to this area, but it did not. Instead, it reacted on the 50% area and went back up. Okay. Now, this is what we called inducement. Okay. The market is now trying to induce some traders. Now, this is what some persons would do because they know that the market has broken this structure. This how they break a structure. Okay, because you remember I said whenever I see a break of structure, you should just come here and hit entry. Yeah? You will lose money. Like you will lose money. So they will come here and they will set their entry and they will position. Now this is what price will do to you. Price would come. Price will tap on this your block and it will give you a hope of buying up. And the next thing you see, it will spike you out. Tap on this block that has not been mitigated and then start going back up. And then that's when you see where they talk about what is it called again? And demand turn supply and supply turn demand and all that. Okay, so this block here, for the fact that the one below it is fresh, it has not been mitigated, you have no right to put your orders here because it's going to fail. Okay, so the market always creates this as inducement, this level here, always creates this level as inducement to induce traders. Let me see the okay, let me don't go there. I wanted to show you guys something, but let me don't go there. So there are 3 steps you should always follow or apply to help you identify a valid break of structure. I think I should write this down. Follow. So number one, they said our meeting would end in 10 minutes time. Mr. Val, Mr. Val, Mr. Val,
Boss,
you can send
I'm
me a Zoom link, right?
okay.
Please, if this one should go down, you send me another one. All right. So these are the things you need to consider. Please, can you guys see it very well? Is it clear, or should I increase it?
Yeah, it's clear, it's clear.
I want you guys to see it very well because after this class, I want to be seeing changes. Okay. Yes, we still have more things to learn, but this is the beginning aspect of it. So, number one, you need to focus on your higher time frame external structures. Okay. So when you open your chart, you want to trade, you're not just meant to go down to 15 minutes and look for entries. Meanwhile, you don't know where the market is heading to. You should go to weekly. Some persons, when they see my weekly charts, they will just shout, "Ah, God, why they analyze from weekly charts instead of what is it called, 15 minutes and stuff like that." I'll just smile. They won't understand. So you should do your top-down analysis. Okay, we have a video on that already. Do your top-down analysis. Know where price is heading to before you choose your OBs or whatever. When you know where, okay, so many of you have heard of order flow. Okay, I've not really talked about that order flow, but where the price is heading to is the order flow. So you don't trade against it. You don't trade against the trend. Okay, so you trade according to the trend. So you need to focus on your higher time frame external structure. I'm not saying you should take your entries from higher time frame, but you do your analysis from a higher time frame. Now, our number two here, mark out your swing high point. I think I would have to go to the charts to explain this. Well, this is your swing high point here. This is our swing high, which we would call our week high. Okay, and this here is our swing low, which is called strong low. So I believe from now, when you're seeing these things on my charts, you won't be surprised. You would understand what I'm talking about. So let's go back. So you mark out your swing high points. 3, locate the origin of those breakup structures in order to identify your valid OB. If you do this, you'll be able to spot these mistakes. This, like this one I showed you guys here. Okay, you see some persons, they say they trade reactions in the market. It doesn't make sense. Why would you risk your money to trade reaction? Go for OB that you know that would hold. Okay, so what's our fourth one? Make sure you're buying at a discount and selling at a premium. It is very, very important. You don't go and buy at the 50% level. For instance, I've given you guys, okay, let's say you went to the market to get a car. You want to buy Lamborghini, and the price of Lamborghini is 1 million naira. Then when you go to the market, when you go to the market, when you go to the market, you realize that you are actually buying the Lamborghini to resell. You buy at the rate of 1 million, you resell at 1.5 million. Then you go to the market and they are not telling you that the Lamborghini is now 1.3 million, and you're now buying to sell at the rate of 1.6. Now, another customer or another seller waited patiently for that price to come back to 1 million, and then the seller is selling close to you. You won't make sales. In fact, you will lose your money. Okay, so that's one of the reasons why you should always wait to buy at the discount point. Then, when you buy at a discount point, you wait for the price to go high for you to sell either at the 50% region or at the premium region. Like some of us here all know about our oil in Nigeria here, our red oil that some persons will stock red oil from January till November, and they will now start selling at December. Some would even sell out 30, 40,000 naira. For something in January, February, March, they are selling at the rate of 10,000, 15,000. So you see, you don't buy at a premium level, you buy at a discount. You don't sell at a discount, you sell at a premium. So I believe this is understood. Hello?
Yes.
We just have, okay, I don't know if you have any questions. I don't know if there's any questions. So work on that before our time elapses. If there's any questions, you can bring it up. Any question? Is Mr. Divine here?
Yes, I'm here. I'm here.
All right.
I have a question.
All right.
That's could you please go down a bit to the write-ups?
Okay, the write-up.
Yeah, the write-ups. You mark out your okay, no, the third one, locate the origin of those break of structure in order to identify value, in order to identify your valid OB. Is it in the higher time frame or is it in the 15 minutes time frame?
Okay, now let me show you guys something. Let's go to EuroGPY. EuroGPY. Let's see CAD GPY. Please, somebody should, less than 1 minute, send the second link to the group. This one also been going down. All right, yes. This is what I'm
Yeah, I mean,
Who is that to
I mean, I recommend I make a
mute,
mix myself.
mute yourself? All right, Mr. Divine, hope you can hear me. Hello.
Yes, I can hear you. I can hear you.
Okay, so you asked the question. Okay. Okay, so you asked the question in from this number 3. Locate the origin of those
Yes, number 3.
Okay, now let's go to, I want to use that USD JPY. Where is it now? All right, let me use this now for an instance. Now look at this. Look at this chart. Now let's assume I opened this chart and I saw this block here. You can see what I named it, inducement block. And if you watch very well, you realize that price violated it. I did not trade it. Okay, I didn't trade it because I was able to spot. I was able to spot the higher block. Now, but some persons would see this block and they would come here and put their entry. Though nobody will try this because it's on a weekly time frame, except that person want to get his or her account wrecked. Now, back to your question. If you watch very well, you realize that we have a break of structure here, POS. Okay, so this price came here, swept this high as liquidity. One of the attributes of its being valid, swept it, it came down and it broke. Okay, so it went down, retraced back up, created an inducement block, and started selling down. Now, this is more like an engineered. So you see this block here now, it's an engineered liquidity. Okay, so price came back up and created this block so that it will induce a lot of person into the market. My battery is low. So it will induce a lot of persons into the market. Now, what happened is price came back, broke this low again, and started going back up. But the question you should ask yourself is, where did this selling down start? Okay, the bearish movement started from this block here. So doing John should be buying back to this block. Mr. Divine, are you there? Hello? Hello? All
Yes,
right.
boss.
Okay, so I don't know if you can hear me, but that's the that's your question of that move. That's where you should go back and wait for it. Okay, so that's the answer to your question. I don't know if any other person has questions to ask. I'll make the video available. I'll make the video available.